Hey, what's up, everybody? This is Salim here, and I'm here to document my journey as a trader. Also, I'm trading primarily ICC. If you clicked on this video because you're into ICC trading by a trader named Sai, then you're in the right place because I am pretty much documenting my journey, but I'm also sharing everything that I know. So let's go ahead and hop on the chart. A couple things that you need to do. You need to add gold. We're only trading gold with this. We can trade some other pairs, but we need to look for smooth trending pairs. And right now, gold is in an uptrend and it's quite predictable because we need something that respects price action and market structure. NASDAQ, I wouldn't do it. Sai specifically said don't do it. So just don't do it. Okay. If you're trading on gold on the Forex side of things, the indices, add the sessions indicator and then just turn that on. All right. And this is, you want it to show New York session. So I just have New York checked. Just make sure your time zone, if it's wrong, check the time zone, go to the 15-minute, come over here, look on the bottom down here. You see on the bottom, it has the date and the time. Make sure that looks similar. New York starts at 6:30 a.m. for me, 9:30 Eastern. I'm Pacific, I'm in California. So this is 5 a.m., if I'm not mistaken, is the pre-market, New York pre-market. It pops off at 5 a.m. sometimes. Look at this right here. That's where the move started, right? And then this is kind of where it ends right over here, 1:45. Okay. So this is where I'm trading. It's very important you have this. And also when you're learning, when you're marking up charts, it's very important that you have it because you're looking at other stuff that you never trade. You're trading in New York because that's where the momentum happens. That's where quite often the correction happens. The correction is where we get in, okay, with ICC. This is where we operate. You hear Sai talking about 1 hour, 4 hour all the time because this is where we work at, right? This is my interpretation. When we work on the 1 and the 4 hour. When we look for an entry, it's on the 15 or the 5. It's on the 15-minute. If the 15 doesn't look clear enough, then it's on the 5. All right, we just had an alert go off. Let's go ahead and just take a quick look to see if our prediction came true or if it's still in the move. Our prediction is coming true, right? So look, quick tangent here. Look at this. So the entry, right? This is not New York, but this was what I was looking at because of the indication, right? So there's your TP1. So we're pretty much, this is a 2.64. Let me look on the 15-minute where that entry would have been. And this would have been for my Forex traders. So maybe somewhere down there, right? And we'll go into the break of structure and all that some other time. And then right there. So that's where we would be exiting. That would be our TP1. That's a 1 to 3. That's beautiful. Okay. Now I didn't take this trade because it was Friday and we just had New Year's and I'm trading on a prop firm account that I passed and I just didn't want to take it, but I'm still acting as if I'm taking it because I want to make sure if I'm right or wrong. Okay. There is a basic concept to this and hopefully this helps you understand. So we've got a push up. That's our indication, right? And then we have a correction, which would be the pullback, right? So the correction, and then we've got the continuation. So at what point do we get in? Well, we get in right here. I'm circling the area where the pullback is ending, aka the correction. Price has corrected itself. And the continuation is about to start. And then we get in right here, something like that. We jump down to the 15 or the 5-minute and we target this high, the previous high, right? And then we wait for price to get to that level. And then we'd probably be a little tighter like this. And then we would see if it's worth holding. Is it going to reverse on the top here? No, it doesn't. We keep holding it and then we can take profit there. Or you could do whatever. Now, me personally, I'm going to take profit here and then take profit here. And then I'm going to be out because I'm not holding long trades like Sai is doing because I'm trading futures and I can't hold. When the market closes, I have to get out. Okay. All right. So now we're going to take a look again. We're going to do the same thing. But here's something interesting. we had an impulse, which I just said impulse, and I want to clarify this right now. When I first learned this, before I knew who Sai was, the way it was taught was impulse, correction, continuation. That's the 3 phases of a trend, right? And if someone else knows more than me and that's wrong, let me know. But from what I've learned, that's the 3 phases of a trend. And the genius thing that I think Sai has done is not called it an impulse, but instead called it an indication. Because when I first started learning this, I didn't even know where to get in. Okay, I get it, but where do we get our money? What, like, how does it, where do we execute? What am I looking for? But by him saying indication, we're waiting for the indication of the market. That means you wait and there's your hint. All right, now we're waiting for it to pull back. Correcting itself. Price corrects itself, comes back. Maybe it comes back all the way. Maybe it comes back halfway. Maybe it's just a small little pullback and then it goes off. Those are different variables that can happen. But when you follow his mindset and how and just the rules, they will save you from losing. Okay. And they've saved me a lot of times. And many times it's just like for many traders that I've seen online, they're having trouble trying to figure out when the correction stops. Just don't worry about it and let it show you, because you're going to wait for New York session anyway. So by the time you go to New York session, it's going to show you that it stopped. If you go and try to trade it because it looked like it stopped because maybe it did something like this and then it came like that, and then you think this is where it stopped and it's not New York session, you're going to get cooked. All right. So now that this has happened, and let's just say we won, okay? And we got out right here. Let's just say we got out right here. Now we need to recognize that through this indication, correction, continuation, that it actually made another indication, correction, continuation, right? What does that mean? That means indication, correction, continuation. That means this continuation now becomes an indication. That is something that took me forever to learn. And I think maybe Sai may have said it in one of his videos along the way. And that's where I was like, okay, now I got it, right? So remember that a continuation will be an indication. It repeats itself, okay? So then we got an indication, correction, we get in right here. Continuation. TP1, TP2. Okay, indication, correction, continuation. TP1, TP2. All right. And the TP2s, like for example, we're up here. Like, how do I figure out where the TP2 is? So that's where we use support and resistance, right? If you don't know what support and resistance is, learn it. Watch a couple of videos on it. I'm not going to go super in depth. Eventually I will. I'll put a video. There's so much to cover, right? But let's say we've got areas you can see right here. Price came down, right? And then there were some buyers here that pushed price up, right? So this to me is a level. So I'm going to mark this level right here. Price comes back up. There's sellers at this level. They push price all the way down. It comes back to the same level, right? So this is a support zone for me. So I just mark the support on, and you can see how many times that's happened, right? You got a tap right there. You got a tap right there. Sellers, look at this interaction right there. I'm sorry, buyers. And then the sellers pushed past that level, right? And look at how they pushed past it. Look at this huge candle, right? So that's letting you know there's some strength, some buyer strength sitting at this level. And then sellers had to come with a lot of momentum and money to push the market down. Then it comes back up and it now turns into resistance. This support is now resistance. And the sellers are keeping it at this level, pushing price down. Buyers are now at this level. Look, comes back to this level. So here's a level of buyers, right? So the way that I learned from Sai is that we've got a level here of buyers. Buyers right there. Buyers are here, right? And then the buyers pushed it back up to the level of sellers. And look at this big green candle here pushing through that level of sellers, right? So buyers are there. Let's say sellers were here. They moved down there, or there were sellers at that level as well. right? And buyers had to put a lot of momentum just to push price back through and absorb those sellers and to keep price moving up, right? And that's where you have the concept that he has, which I really like too. And I feel like I learned it from, I heard it from other people, but I really learned it from him, is that above this level, we're looking for buys. Below this level, we're looking for sells, right? So here's a sell. Here's kind of it's a sell a little bit, but then it comes back up. But that's just something to keep in mind, right? It's above this level, sells, whatever. All right. So just kind of keep that in the back of your mind. You don't need to master that or anything right now. All right. So the other thing is that we're going to mark up the more levels, right? So here's the level right here. Now look, I'm just kind of doing this quickly so that we can see some ranges. All right. So here's a range right here, range right here. So as you start seeing ranges kind of come into play, and these are zones right here. So these thin boxes here are zones that I'm marking up, and in between is a range, right? In between is a range. So you'll notice that price moves from range to range, right? And that's pretty much, nothing is a guarantee, but like if there's something that has a high probability, it's that. All right. So let's take a look at this now. Now let's apply what we just talked about with the ICC down here below, right? Let's apply that up here. So we're on the 1 hour, okay? And right now, we're not gonna look at the sessions. We're just gonna look at the concept. So let's see. So we've got price here. Let's do something obvious. So price breaks out, right? Price breaks out. So here's the level right here. Price makes an indication all the way up to here. It came all the way up to this wick. The wick is where it went to. It went all the way to the wick. It didn't close. The end of the body is where price closed for that hour. But the wick is where it traveled to, right? So just for the sake of the story, price made an indication all the way up to the top of that wick, then came down for the correction. And since we know this is a level right here, buyers and sellers in the past, we're looking for it to push back up for the continuation, right? And if you see right here, price does what? It pushes up all the way up here, right? Yeah, okay, it did this first and then came up. But that's how price moves. Price doesn't move in one straight line. Price moves in kind of this zigzag fashion, right? More buys, little sells, pull back. More buys, pull back. More buys, pull back. More buys, pull back. So now we've got like I said, we've got our indication, correction, and then continuation. Okay. And if you look, it goes to the top of that range, right? There's a high probability it goes to the top of that range. Okay. So if we were in this trade, let's bring it back here. Okay, let's bring this back. Now we're just going to play this like we were. All right. So we get our indication right there. All right. Price goes all the way up. We're waiting for a correction. I'm going to go to the 15-minute just so we don't skip the correction. All right. Because in this replay view, it kind of jumps a little bit because it just does the candle close. All right. So now we've got a correction. Now, when price is here, I want to see, are we going to reject? We're getting nice wicks on the bottom and we're on the 15-minute. Here is the prior swing, right? So this is the area to break. So once we break above that, I know that we're going to probably continue all the way to the top of this range right here. We're going to get to right here. So if I get in somewhere around here and then get out there, I should make profit. But since the distance from here to here is much shorter than it is typically, I'm going to jump on the 5-minute, right? Because I need to know a little bit earlier when we start moving up, when the buyers take control of the market. So right here, I can see that we've rejected a number of times. Let me get rid of all this. So we've rejected a number of times. We're having a break of structure. I'll go over that in another video because this video is already getting kind of long. So we've had a break of structure. We're having a break of structure here. So if I were to just trace this is on the 5-minute too, right? There's break of structures on different time frames. So right now, boom, here's our break of structure. Break of structure just indicates that we're reversing, right? So we were going down. You can see See right here where my mouse is, where we're going down, and then we have a break of structure and it starts going up, right? But we want to know, when does it actually break and then go up? So the official break to me is after it passes this elbow right here. And there's an elbow right here. That's a swing, a pivot point, okay? Pivot point elbow. So once we get above that level on the 5 minute, that's where we break the structure on the 5 minute. So I'm going to do BOS, stands for break of structure, okay? And this is also a BOS on the 15 minute though, okay? BOS 15M, BOS 5M, okay? There we go. All right. So once we get above that level, we're in, okay? It rejected from there. All right, we're still waiting. We're not in yet. We're not in yet. We're not in yet. We're not in yet. Okay, good. All right, price goes down. We're not in yet. So as you see right here, there hasn't been a break of structure. And if we look at it now, this saved us from getting faked out, right? It looks like it's downtrending, right? All right. So now, let's just keep watching. The pullback may continue lower. That's what I'd be thinking. Okay, comes back up. Now I need to see it break a structure again. Okay, so now this is interesting. Now there's no red candles except for right here at this point. I'm still not doing anything until we get above this level. Okay, price comes down. Now because it made this red candle here, my 5 minute break of structure changes. Now this is the break of structure for me. All right. And I usually have the 15 minute open too, because I want to see how it looks on the 15 minute. If I go to the 15 minute right now, it'll probably jump us ahead just because of the way this works. Okay, cool. Right there, I'm getting in. All right. So let's just say we get in right there. Okay. So we're risking $315. Okay. And this is our take profit 1 right here. I would have wanted to get in just a little earlier, just because we're only getting about less than a 1-to-1, right? I can adjust it a little bit, but still, I think I'd still be down here. We're getting less than a 1-to-1, but I'm pretty confident that we're going to go above this level and get to the top here, which would be the top of the zone, right? And then we just let it play out. We already know that it's going to go up, but that's just how we would execute this trade. And there we go. Well, it almost got there. So there we go. Okay. And that's how I would have traded the concept of ICC for this scenario. Now it's a lot easier, right? Because this was the beginning of this bigger reversal on the 1 hour, right? We're on the 1 hour. So if I do this, you can see where we're trending down, and then now we're starting to trend up, right? And we know that overall gold is bullish, right? If gold is bullish, we're going to be more favorable for buys. So we can go back in here. Like I said, we made another indication. So this was a level right here. We made an indication, correction, continuation, right? Right. And then we're above this level. I think what I would do is I'm waiting for New York, but we're just for the sake of this exercise, indication, correction. Let's see if we get a continuation here to the upside to this level. Okay. All right. So I'm going to go back to the 15 minute. For the sake of this trade, we're just going to watch this. Okay. So price comes down. We also notice some consolidation, right? What happens after consolidation? Price is ready to explode in one direction or the other. We're in an uptrend, probability, that's a confluence that we're going up. Gold is bullish, that's a confluence that we're going up. And then let's see, there's our break of structure. It would be on this level right here, right? Because that's where the highest place that price has gone. We're identifying that the sellers are right here. So I'm going to go ahead and mark sellers. And we want to see what happens. Okay, price breaks above that, right? So we're going to say that price is going to get to that top level. Let's see, price gets, oh, it didn't get to that top level. Okay, so let's take a look at this right now. So we're going to go back to the 1 hour. All right. And we're going to see that price now broke this level, this break of structure on the 1 hour. A break of structure on the 1 hour is more is more important than a break structure on the 5 minute or the 15 minute, because it is more than, it's really showing you where the market is going. The 5 minute, like there was probably, you know, a few 4, 5, 6 break of structures on the way up and the way down on the 5 minute, right? Because that's how it moves. It moves up, it moves down, because there's smaller trends happening inside. So this break structure on the downside, and I'm going to show you how to prevent this as well. Let's just go to sessions. I'm curious to see. Okay, so this happened during New York session. So this could have been a loss right here. Usually if price comes up high enough and then down, this will be our TP1, right? Remember I said TP1? That way, if price does reverse on you and it doesn't want to go any higher, you still make some profit. If it doesn't pull back properly, right? This looks like it just reversed right here because it broke this structure. Let's see what happens. Okay, now we're in a downtrend on the 1 hour. We're in a downtrend. So now we made an impulse to the downside. Are we making a pullback and then a continuation down? Let's see. Okay, so we're pulling back a little bit more. And now let's see if this was an indication. I said impulse, and every time I say that, I'm going to correct myself and say indication. So we got an indication that the market wants to go down because it broke this level right here. The market comes back up. Let's see if it goes down to this level right here. Right, so we're going to see, and it does. Right here. There's a big wick right here. Okay, so trend reverses. So that's what we need to look at. We need to say, well, what just happened right now? So at one point we had this entire highlight was a trend. I'm going to make that black. And then we had another uptrend right here. And now it seems like we're having another downtrend. I don't know how long it's going to be or what. So we're just going to have to follow it and let it show us. While I was recording this video with you guys, you were watching everything. This trade was happening in real time, and I called it out, and it pretty much just hit. I don't need to take it all the way up there, but right now I'm in territory where I can just take profit, right? So this is really powerful. And once again, and we're going to do this all the time. We're going to do this all the time because you got to do this too. You got to do this exercise with yourself, right? So right here, this would have been a great trade. So once again, why did I take this trade? Because there's an indication. Okay, hold up. So there were sellers at this level, right? Sellers were at this level, and the buyers were at the level below it, right here. You can see buyers are pushing the market up, right? And then the buyers pushed it up, broke this level. That's my indication. Then we had a correction, and then now we've got a continuation, right? And then this would be the TP1. And then if price continues to go up and it does something like this, then up here would be TP2 for me, you know, unless I see something crazy happening. I'm like, okay, it's time to get out. I'll see a break of structure. That's where I'm looking on the 1 hour for it to reverse and come down. Okay. But as far as the concept goes, the TP1 is the prior swing, pivot point, elbow, whatever you want to call it, right? Pivot point. So from down here, we got in right here, and we got right out there. And I think when I called it, I think we were somewhere right around here. But this is what I was telling you. This is going to be TP1. And we just went over, and I went over how that all works, right? TP1 is the prior elbow, and then TP2 will be the next range above, which will probably be this area right here. So my next prediction is that, and there you go. See, it's pushing up. So my next prediction is if it breaks through this level of sellers right here, it breaks through this level of sellers. I'm going to leave this on the chart here. Then I believe price is going to go up to the top of that range, because that's usually what it does. And that would be my take profit too. Or I'd be looking to get out somewhere around there. All right. So I know that was a lot that I unpacked for the first video, but I wanted to show you guys kind of what I'm doing, and hopefully that provided value. If this is something that you're interested in, please subscribe. Please like this. Please show this to anyone else that you think would benefit from this. And I'll see you guys tomorrow. All right. Peace.